Hey patrons. So just been talking to some of y'all in the chat today, and it seems like there might be a little confusion, which I really understand why there might be, just because like Fibonacci is not like supposed to be like really that simple, just because there are different swing highs and swing lows, and like when people get confused on shorter time frames about Fibonacci, they're like, the questions are like, what makes a swing high, swing low valid, All right, so, let's just like look at Bitcoin where we were in this amazing uptrend, right? And every time we sold off, we barely sold off. Like, we like never made like real big retraces once this trend began, right? So it was really tough to Fibonacci. Like, you couldn't, it just kept going up, man. And just kept, look, it pulled back some, like from I think the low here to the high with 23% retrace for rallying again every time you were doing that. But look, here's something you can see a swing low, and I wouldn't use the 60-minute for Fibonacci for swing trading. Maybe scalping, day trading, something like that. But I don't use it on the 60-minute just because I could get such it just looks a lot better for me on the 4 hour, right? So I can see like a swing low, like just the previous swing low, right? That's where you go. Not like, oh, is it this one? Or no, it's just you go back to that previous swing low to the high from where we sold off. We had a 50% retrace and reversed our price action. Charles Dow's theory states that right after an impulse, you most commonly retrace 50% of the way before reversing your price action to where that prevailing impulse was, which was up. So you ran up again. So, like it can work like that. And then, yeah, you can use fibs. It's all relative to whatever swing low, swing high you're looking at. So if you were in the short term looking at this swing low to the next swing high, 50% retrace before rallying again to the upside, right? You're just looking for those swing lows. Look, here's a swing low. You can use this swing low to this swing high. All right, candle close. What'd you do? You sold off 62% of the way before rallying again, before making a lower high and then dumping, right? Oh, look, here's another swing low down here, right? And you can, this is the way, it's all relative, right? So however you want to Fibonacci, right? If that was a swing high that was created, you started selling off, you go your previous swing low to high, and we hit an 88.6% retrace here. This is where we showed bullish divergence, 77.85. Yep, this is the area where I reaccumulated some Bitcoin because the convergence was so real here. But 88% we retraced. Hold on a sec. Divergence, of course, right? Or convergence. A low on price, a slightly higher low on price, about the same, with lower levels of negative momentum, higher levels of relative strength. It was on both oscillators. Okay. So that's what you're thinking about. You're like using Fibonacci, 88% retrace, man. Dude, I'm telling you, those are like insanely deep retraces where you often get reversals, especially if your trend's actually bullish and worth a crap. 88%, man. That's why you need to make sure a lot. And I noticed like when I was in Texas, Steven did not have 88%. Make sure these Fibonacci coordinates are all plugged in to your settings, okay? Leave it there for a second. You can screenshot this too. I wish I could make it larger. Maybe I can't. Hold on. Does this work? No way. I've never seen it work on. Oh, yes. Nice. What? Hold on. There we go. Nice. Zoomed in so you can see it better. Make sure you have it all here. Just go ahead and hit Alt print screen and then open up Paint and save this so you've got it for the future. But the 23% retrace, 38.2% retrace, 50% retrace, 61.8% retrace, 78.6% retrace, the 100% retrace, the 0, right? The 1.618, the golden mean ratio, the 2.618, the 3.618, the 4.236, the 1414 fib extension, the 1272, 127.2% retrace, the 141.4% retrace, right? And then, of course, the 88.6% retrace. Okay. Make sure this is always selected because if it's in log scale, it'll work out well. you can actually Fibonacci and log scale. We know that now. That this is a new update they implemented maybe 2-3 weeks ago. So I'm happy about that. Okay, can get back to it. Hold on. What? Oh, I'm confused. Well, I'm not able to zoom out now. What the heck? Oh, maybe it's shift? Dude. It's control, and I'm doing control, and it's not letting me. Oh, there we go. Oh, I get it now, I guess. Okay, so Fibonacci can be as short-term as you want it to be. It's all relative to whatever swing low, swing high you're talking about. Look, for the downside, okay, say you're selling off. You went from your high point to your, what the heck, move this. High point to low point, what did we do? Patrons, you rallied 50% of the way before selling off. And then from your low to high, retracing 88.6% of the way. It's all relative to how you're looking at it, okay? So you get it 50% before reversing your price action. Wow, Charles Dow would be happy about that, but Charles Dow also understands we might have been in a very much bullish trend. So though you do reverse your price action at the 50% and sell off, you still made a technical higher low, double bottom with convergence, divergence, and we were able to signify that, hey, there's a good chance we could break to the upside based on the oscillators, right? Okay. Same thing here. It's all relevant. High to low. 2 candles? Yeah. Ran up, broke above the 618, almost at the 78.6 retrace before selling off again. So we retraced 75% of the way before dumping again. Okay, this is the 4 hour. And a lot of times when you're, you can't really use the daily when you're just continuously running on up, right? For how long did we just try and try and try? I mean, we didn't really try. We were just kind of like, okay, man, we realized that Fibonacci is just not working right now for us on the daily. Because remember when we like blasted up here, all we did from the low to high was retrace 23% of the way, which it did work, I guess you could technically say, because it was like, we had the ascending broadening wedge pattern, remember? And then we eventually broke it. Right, ascending broadening wedge, breakout, clearly measure move hit, right? But when you go from your low to high, and then you retrace 23% of the way, that is the shallowest retrace. And if conditions are overwhelmingly bullish or overwhelmingly bearish, you will not be able to sell off below the 23% retrace. Sometimes you hit that, and then you go again, man. Straight up, man. It just depends on the market conditions. So that's it, man. That's your daily. And when in doubt, if you can't really, if you're looking for those major retraces and stuff, you just go to the daily when in doubt. And that was something I left out in that static video I did on Fibonacci. So daily's really good, man, for fibbing. But again, it can sometimes be tough when you just keep on going up. And then you can go to the 4 hour to use Fibonacci. And something that Blank used earlier, a patron, in the patron chat. And if you're not in the Patreon chat, what are you doing? You need to get in there. We have a lot of good discussions and good questions are asked, and do the best I can to answer, as well as other patrons. So what have we done? From our previous low from July 17th, all the way up to the major high, the high that we can clearly see is discernible, low to high, we've retraced 61.8% of the way, which is the golden retrace. And so we're showing at the golden retrace, at critical support levels, the left shoulder, bullish convergence, where you make a low on price, a higher low on price with lower levels of negative momentum and higher levels of relative strength. We're getting that right now. So those are decently favorable conditions for maybe a bounce to the upside. You're trying to bullishly engulf to boot on the 4 hour, which is good. So there might be a low risk area here, but other than Fibonacci and convergence, and maybe a scuffed inverse head and shoulders, because I say it's scuffed because symmetry, I think, is pretty freaking important to a pattern, right? And symmetry, as you can see, clearly off, right? Very, very weird, asymmetric, where it's, should have been over here if it was to be symmetrical as a pattern, right? So like this was pretty good, not too far off at all before it broke to the upside. And then, yeah, so you might have a scuffed pattern. You got convergence. You're at a golden retrace. And you're trying to bullishly engulf. So those are arguments made that we might break to the upside here. and that's really it. And if that's the case, I think the neckline definition is a little bit changed. Slightly upsloping, whatever, because this clearly didn't turn out to be, you know, the right shoulder. If it was, we would have broken out and kept going. We did break out, but then it just, it failed miserably. So maybe you were just painting a larger picture. And of course, this is all probabilities. We don't even know. This could be completely wrong or invalid or not even be one. But it's okay, because then you could just anchor point 1 and 2. If this ended up being a pivot point, we could anchor here 1 and 2, and then it turns out to be some sort of wedge or something. But remember, we'll say it was. We were given the inside information that it is the swing low. Again, we don't know. But man, I'll tell you, you know, that to me looks like a wedge of some sort. Right, two, you know, upsloping, converging trend lines. Okay, so maybe it rallies on up and hits 11.2 before selling off and eventually breaking. Because remember, if you, this is another thing we were talking about. Maybe this isn't just Fibonacci, where people are like, well, how do we know what trend we're in? Well, it's like, you know, on the daily, you're very, very much bullish. It's awesome, man. It's so good. But even in the best bull trends, you go through these short-term downtrends. And this is a shorter-term downtrend, I think. I mean, and it can manifest into a much larger sell-off, right? Where it ends up being actually the reversal was up here. What happened? How did we usher in a bull trend? It all started with the Gartley, man. We all know it. We all know the Gartley dudes. Okay. That ushered everything in. And then we had, you know what it is, the cipher that actually is a larger pattern than the Gartley. But I think that has to do with crazy amounts of volatility. The price has changed so much, right? So did this cipher usher in the trend reversal? Well, certainly it has for now. We are not making higher highs. We would have to break 13,000 to reverse this overall trend. You have to do two things, because you look, a lower high, a lower low has now been identified, right? A lower high than your previous high, a lower low than your previous low. And this is like what separates a lot of analysts from others, like not being able to identify a trend reversal. The trend reversal is identified with this, okay? From the uptrend we were in, you haven't really been making lower highs, lower lows, not big ones like this, all right? And you can see the structure is very large. I mean, between 14K and 9100s. Okay, so until you break this trend line, this trend remains intact. Okay, and so I guess we can go to the daily, and this is just turning into like a longer video, I guess, but this is just for y'all, you patrons, that just wanted to clear up some stuff with Fibonacci and let you see how it's just relevant, not to the time scale, but relevant to the swing low and swing high, right? And you have to go to higher time scales to figure out how relevant or how minor or major that swing high is, right? If on the daily you go to, right, if you go to the daily and that swing high, swing low you were looking at on the 4-hour or 60-minute doesn't exist, well, then you know it's not that significant. All right, so here we are looking at Bitfinex, the potential daily Gartley, which, you know, we were in the uptrend and we broke out of it, right? Very well respected channel, very well established channel. You're out of it. You came up, rallied, attempted to get back in it and failed multiple days. And then I know zoomed in. Yeah, like really zoomed in. I saw this last night. I'm like, what the heck? There was a dark cloud cover, or on maybe not on this exchange, but like maybe Coinbase, where this was a slightly higher. Well, it opened higher, a little bit higher, and that's what that dark cloud cover is, and you pierced through 50% or plus of the previous green candle. So that's a reversal pattern. You can barely see it here. But then what is this? 1, 2, 3. To me, it looks like we have 3 black crows reversal pattern going on. And so it's just, yeah, you hit the critical support at 10K. You fell way below it, 98.64, before bouncing back. Okay, so again, you're not making lower lows yet. Maybe we could come in. Look, there's multiple things that can happen here. We could bounce here and rally, like, you know, maybe blank 618 from the low to high plays out with a convergence. Daily, though, you're still holding on to a decent amount of negative momentum, and the RSI is in, you know, neutral territory. So it is just not as clear. And I wish technical analysis was like that, where you always know or have a good idea. But dude, it's just not the way it works. Like, I think within, like, ebbs and flows, there's a lot of randomness that goes on. And then I think near bottoms and tops, there's a lot less randomness going on. Okay, so like, for instance, up here, we made that double top, lower high double top, showed bearish convergence. We didn't even have positive momentum when we were rallying again. We then ended up bearishly engulfing, not only on the daily, but also the weekly. All right, those are big signals and indicators to a trend reversal. And so again, that's how that's, you know, and with all that going on, you then had the bearish cipher that showed up. And so since then, it's been lower highs, lower lows ever since. And so, like, on the, it looks fine, right? Still very much in an uptrend, even though you fell out of the technical channel, which is what gives us, like, vision to see the trend. And you're back testing and failing now, but the selling isn't that immense yet. And so what am I going to do with this information, though, on the 4-hour? How can I make a trade? I can't really do anything. Oh, it just makes me, I just sit there, and that's why I'm still patiently waiting for a much larger swing trade, a big one, significant one at 8,800, potentially, if I can get some sort of favorable oscillator stuff, right, with divergence. I don't know if we're going to get it if we just sell off here and go. I think your negative memo would just pick up more, and you wouldn't diverge at all on either oscillator, which would not be cool. But so that's why we go into the 4-hour and we look for more opportunity. Excuse me. And you can just see the back test. We're getting failure, kind of head and shoulder-ish. But if it was a real head and shoulder, man, we would have had follow-through on price action. I think you're just hitting a 618 critical support level and trying to bullishly engulf with some convergence going on. And then just us going back to the other chart. And if you watch the stream, I don't know, I mean, some of this stuff I'm going to talk about and have talked about before. So, does that all make sense, man? Okay. If you have more questions about it, I tried everything I could in this stream to, you know, help you understand. If you're in doubt on Fibonacci, go to the daily. The swing high, swing lows you were looking at on the 4-hour and 60 minutes. If you can't see them, then those were not the major swing lows, swing highs. Okay. And you can go in the short term and whatever's relevant, right? Like, look, you can go from your high point to low point to get fib extensions to the upside. Look what happened, right? We eventually hit it before reversing our price action, but we were so freaking strong that it was just a bull trend and we ran again. Yeah, I guess we can talk about fib extensions for just a second. I know people are just going to be like, bleh, at this point, but you can't do it here. All right, so let's, for instance, here's a swing high to a swing low, right? Clear swing low because that's where the rally began. Didn't quite hit the 1272, but got pretty close. Pretty close. Same thing here. Here's a swing high. It goes to a, oops. You go from a swing high to your previous swing low, and you get targets to the upside. We hit a 1272 before the bearish engulfing, and then another bearish engulfing candle. Okay. Those are targets to the upside. And then we could just look at, I don't know, a scrubby S coin or something. Okay, looking okay. Still on excellent BTC. Terrible downtrend. Look at this downtrend, man. Inverse of Bitcoin much? Yeah. But it doesn't look like it's created an uptrend like Bitcoin has created a downtrend in the short term, right? So, excuse me, man. Hitting that critical support. Well, what's going to happen, man, if we fall below it? You know, here's a way to look at this. And sometimes it just doesn't work because of how bad things get, but you just, like, if you dump below a previous support, right, you see a major low here to a major high That's how you get fib extensions to the downside. Look what happened. Though it didn't last long, you did recover slightly, momentarily at the 1272. I think bots saw that too. We're selling off again. And then, look, we just fell below all the major fib extensions. Terrible, man. All right, just so bad. But in a typical situation, you just think about it like this. You could go from your swing low to your swing high. And these are your targets, the downside. Look, we hit 100%, fell below it, rallied, lower high, sold off. And see, you fell below the 1618, the 1414, 1272 before bouncing. And really, it was only because of the support here. And this just shows, like, how bad this market is, man. Like, there is no buying pressure, no demand. But we are beginning to make higher lows now, I guess, right? And so there was an ice line here. And I think there was some daily divergence or whatever. But I'm just trying to, this is probably a terrible example because of how terrible the selling pressure's been. But, like, here's a good example maybe. From, like, just a low to a high. Look, we wicked down to the 1618 before reversing our price action. All right, we reversed our price action, and then the fibs are good. That helped us see where we're going. 1618, golden retrace for rallying. And you can do this on any time scale, from any swing low to swing high. Okay. Look like here. So I don't even think this would work. You can see fib extension. I think it went too high for the fib extensions. And I'm not going to worry about it, man. Just trying to just give some examples of how to find targets on, your fib extensions, how to actually plot them, right? Because I think I might have left that out a little bit in the YouTube video. So anyway, all right, this has gone on too long. It's going to take forever. 22-minute video. It's going to take me an hour to upload. So I hope you enjoyed this. Give me some feedback in the Patreon comments. Maybe just hit me up in the Patreon chat or in the live chat. Let me know if you like the video, okay? So I'll see y'all when I do live stream again. Till then, respect the T. A.